Welcome. I'm Heath Albritton alongside Justin Lee.
Yeah, I'm excited to be here. It's going to be good.
How to get to know us and who we are, how we do business. We're going to talk all things mortgage. We're going to try to cover everything, Justin. So,
Loans for homes.
Loans for homes. Good afternoon, folks. It's Friday, and this is the Loans for Homes podcast.
It is.
Welcome, Justin.
It's going to be a little different today. What's our topic today?
It is. So we've got a little segment called Can Your Lender Do That? That's it, right?
Yep.
So we've got some things here that we can offer that we feel like not a lot of folks out there can offer everything that we can. So the first one, can your lender do a VA loan with no lender fees? That's big, Justin.
It is, and we do it for all of our veterans on our internal VA loan. So, I mean, that's a huge perk to not have to pay your processing and underwriting fee.
Yeah, and that's worth $1,690. And I think, Justin, the last I heard, since the year 2000, we have saved VA customers $68 million in VA lender fees.
And counting, that number is only going up. So we're only going to help more veterans, and that's probably my favorite perk of working here.
Yeah, it's good. What do you got?
What about like our portfolio stuff, our asset-related programs? Like we can do asset dissipation. We can do, if you've got 125% of the loan balance, I mean, we don't need any income to qualify. So we've got a lot of different asset options that other lenders don't have.
Yeah, that's really good, man. That asset program is phenomenal. I've used it several times myself.
Yeah.
Can your lender do a bank statement program where we can use either 12 months of your personal or business bank statements and use that as income?
Most banks can't offer that. I mean, that's also another one of my favorite programs. I'd say maybe a third of our self-employed borrowers that other people can't get closed, we're able to lean on that program, and the rate's comparable to a full doc loan.
Yeah, I've saved a lot of deals just by doing that. So if you're self-employed and your tax return doesn't look the best, right, you're taking advantage of the deductions that are given to us, and you write off all of your income and you don't qualify on your tax return, let's flip it to a bank statement. Let's use your deposits, your business deposits as income and get you qualified for the loan.
Or maybe your finances are just really complicated and you've got a short closing timetable, so it's just easier to go that route and it makes sense. So
absolutely.
We've also got a DCSR loans, which is if you're an investor or buying multiple investment properties, sometimes it's easier just to look at that one property and use the projected rent from that property to offset the payment at either a 1-to-1 ratio or 1.25 ratio and close that way without having to fully qualify.
Yeah, and the beauty of it, guys, we don't even list an employer on there. No employment and no income. The property stands for itself. So it's it's just a no-brainer, Justin. If you're buying investment property, why not go DSCR? Debt service coverage ratio. Let the property stand for itself. It's
right.
So easy.
Just like the bank statement loan, that's a way to simplify the process. And also it's a way to maybe get some exceptions or that don't fall perfectly into the Fannie Freddie bucket. Or maybe you have more than 10 properties financed. Like, it's always worth looking at the DCSR loan and just comparing that to the conventional products.
Absolutely. And can your lender offer a renovation loan? So Justin, what we do, it's a one-time deal. We will give you the money to either purchase and renovate the property, or if you already own the property, we'll give you the money to renovate the property. And that's on a 30-year fixed rate, Justin.
Right. Or does your lender offer an interest-only option? There's a lot of investors out there that maybe things aren't cash flowing perfectly right now at the higher purchase prices, so it's worth looking at an interest-only loan until maybe you refinance to a 30-year fixed down the road.
It's a way to keep the payment down.
Correct.
And another way to keep the payment down, how about a 40-year term?
I don't know anybody else that's offering a 40-year term.
So guys, instead of financing for 30 years, you can finance for 40 years, and that will keep the payment lower. And I think we also offer that on investment property as well.
And second homes, you can do it as a fixed or an interest only.
Yeah. So if it's a tool, look, guys, if you're going to pay the house off quicker, or if you're not going to have it for that long, I mean, that's one advantage. Do a 40-year loan, right? Amortize it over 40 years. Keep the payment lower to help the cash flow.
Correct. What about, can you do a no money down FHA loan, like an equity aid? That's something we can do.
That's pretty good, Justin. No money down for an FHA. It's got a better interest rate and an easier process than a THDA loan.
It does. Everybody can do THDA, but not everybody can do a no money down FHA, so it's a great alternative.
It's a great tool. What about this one, Justin? If you've got a property you haven't sold or you can't sell, you want to buy the next home, but you don't qualify for both payments. If you're trying to qualify with that and you've got to count the current payment against you, well, guess what? We can do that without counting your current payment against you. So if you got the down payment, or you can pull the down payment out of the equity, go buy the new property, Justin, we can now qualify you without counting the principal, the interest, the taxes, the insurance, everything on the house that you're leaving behind that you're either going to try to sell or that you can't sell.
Right. And we just need to know you're going to list that within 90 days and you're going to sign a letter of explanation. And I mean, there's a lot of people that are not able to buy and sell at the same time right now. So that buys some time to take your time and sell in your current home and go ahead and close on the new home that you want.
100%. What else you got?
That's all I got.
Well, I've got one more.
I know there's a lot more. What you got?
There is a lot more, and I think a huge one, guys, is a reverse mortgage. A lot of people don't understand reverse mortgages. We've got a team, folks, that can explain this to you in such detail. It's not for everybody, but it's a great tool for reverse mortgage if you're of a certain age, right? We take the equity in your home. You have 3 ways to take your money, Justin. There's no payment. There's no monthly payment on this, guys. So if you've got somebody that's on a fixed income and, you know, they're struggling to make their house payment each and every month, or if they need money to do something, then a reverse mortgage may be right for them.
So if you're 62 and older, and the older you are, the more access to equity you have.
Absolutely. So again, it's a great tool, guys. It's a tool. That's all it is. But ask your lender if they can do these things. We'll see you next week.
Have a good weekend.
Hey, remember to like and subscribe.
Can your lender do that?